It is never too early to start instilling in your children the importance of being responsible with money. So don't let that stop you now. The earlier good habits are formed, the more effective they are. From an early age on, your kid will gain self-awareness and self-confidence as they learn the value of money from you. Talking to your kids about money is one of the best things you can do for them. According to Ron Lieber's great book, The Antidote to Spoiling Your Kids is to teach them to be self-sufficient, charitable, and financially savvy. Allowance also necessitates patience. Being kind and helpful is the point. The ability to persist is essential for giving. The topic of money can evoke strong emotions, from greed to shame. Reason enough for most families to avoid having frank discussions about money. It's crucial to instill in your kids an appreciation for and understanding of money. If you want to see your wealth grow, it's a waste to amass wealth just to pass it on to a generation that knows nothing about how to manage it, so imparting financial literacy on your offspring is a priceless gift. The best way to prepare them for adulthood is to force them to start saving early. 71% of adults in a recent Wells Fargo survey on saving habits reported having learned the importance of saving from their parents. However, only about a third of today's parents, 36%, say they regularly stress the importance of saving money to their children. Almost two-thirds of respondents said they discuss it less than once a week. It's possible that it could be forever before giving children an allowance is a great way to encourage them to start saving. Let them know they can use the money however they like, whether that be saving it or spending it. But there is a catch. If a friend's birthday is coming up, for example, tell them that they'll have to save up their own money for the gift, and encourage them to make money outside of their allowance. A parent can encourage their child to work by rewarding them for extra chores around the house or by assisting them in finding a summer or part-time job. It's great for their business acumen if they start their own little enterprise. Furthermore, putting up a lemonade stand is guaranteed to draw in a large crowd. During the hottest part of the summer, saving money is a win in and of itself. But it's also a routine that shapes a kid's brain in important ways. The ability to manage one's finances requires patience and persistence. Those who are patient and frugal will ultimately be rewarded. Is it more important to you to save up for a new bike than to buy a $5 toy? Financial self-discipline, patience, and delayed gratification all contribute to resourcefulness's success. In this case, would you rather have the bike or the new iPhone? While whole life insurance is a great long-term investment, you may be wondering what else you can do to build your savings or increase your income. Policy loans shouldn't be used to pay for inessentials that can be saved for in other ways. Taking this to heart is crucial. Teach your children the value of short-term savings by encouraging them to keep their spare change in a jar, envelope, or savings account. Please verify that there are no ongoing costs. Improve self-reliance by a factor of 10. The authors of The Gift, Wealth, and Wisdom Cycle emphasize the value of letting children earn their own way. It's not wise to put a child in charge of the family business or a position for which they are unprepared. For instance, having them gain experience elsewhere is often a better idea. First, children of all ages lose the motivation and belief in their own abilities when they are constantly bailed out, subsidized, or promoted without deserving it. They continue to rely on the bank of mom and dad for their financial needs even though they are well aware that they are living beyond their means and contributing little to the market. Thomas Stanley, who wrote The Millionaire Next Door, The Millionaire Mind, and other books on personal finance, claims that giving money as a gift is economic outpatient care that usually fails. The central message that Stanley emphasizes throughout his books is that we must stop supporting our children when they don't require it if we want them to be self-sufficient. The more a child is given, the less likely they are to save and the less financially responsible they become. 9. Instill in your child an appreciation for hard work as a fun way to teach them the value of money. Fortunately, there is a fantastic solution to this problem right here. Before we move on to the next point, try this. The next time you go grocery shopping, give your child a small amount of money and tell them they can pick an item or two which fall under this budget. Then encourage them to pay for it themselves at the till. This will teach them how to handle money and give them a sense of pride. when they complete an adult task. Give this video an 8 out of 10 if you're enjoying it so far. If you think your child will benefit from the advice presented here, pay them like an adult. Many grown-ups struggle to grasp the complexities of taxation. Instructing the next generation. It's important to instill this idea in young minds. You can do this by showing your child how taxation works, such as by showing them how you save a small portion of their allowance every time you give them money. This amount approximates the tax that would be paid to the government in the real world. Since the funds will be deposited into a bank account, you'll be able to use this opportunity to educate them on the tax system while also facilitating the beginnings of a savings habit. When you feel it's the right time, you can talk to your kid about their savings and make sure they're being responsible with their money. 7. Instill in your child the importance of saving money and sharing what is saved. The majority of people would put their hard-earned cash or savings into shares. To make the exercise more engaging for your child, fill 3 glass jars or 10 cans and label one with save, one with spend, and one with share. The next step is to explain the idea to your child. As a reward for their hard work, the contents of the save jar will be applied toward a more substantial, costly purchase, such as a PlayStation or a bicycle. They can do as they please with the money in the spend jar. Your kid will put money in the share jar to give to a good cause. This is a wonderful opportunity to instill in your child the importance of giving back to the community and helping those less fortunate than themselves. By deciding together with your child what percentage of their allowance should go into each jar, you can use these creative and entertaining methods to teach your child the value of money. Adults can be bored by preteens and teenagers who start talking about money on 6 games and applications. Consequently, it's possible that kids will tire of it. Here's where cutting-edge tech comes in clutch. Children can learn about money through a number of fun and engaging games. Similarly, there are apps that can be useful if your child is having trouble with something like keeping track of how much money they make from each chore. Allow them to use these tools after you have taught them the fundamentals of finance, and they will be able to put their newfound knowledge to good use. As your children get older, you should trust them with increasing financial responsibilities around the house. They will learn to budget their money early on in life thanks to this. This will give them a taste of financial independence before they even receive their first paycheck. This will help them understand the significance of the topic at hand and prevent them from making impulsive purchases. Don't be afraid to put your kids' ideas forward by naming them to the Family Foundation's Board of Directors. Create a lively and interesting atmosphere. The most important thing is to let your kids make their own decisions. Remember that they are still developing their own sense of right and wrong. Even if their views on the matter diverge from yours, answers should gently steer them in the right direction, but failure should not be something to be feared. Kids of successful parents often worry excessively about falling short themselves. Their parents' willingness to take risks probably contributed to their success. But their kids may be afraid of disappointing them and try to avoid making any mistakes in their own lives. This anxiety about making mistakes can be harmful. As a result, kids are less likely to challenge themselves by trying new things or taking on difficult projects. When failure isn't an option, children from affluent families may be more likely to experience anxiety. Now everything you do is a show of strength or weakness. Sometimes parents make things worse when they try to shield their kids from the results of their own poor decision-making. While this may help their kids in the here and now, it only encourages a lifelong fear of taking risks. In addition, studies have shown a correlation between overly involved parenting and increased rates of depression and anxiety in young people. Thirdly, show your children how to manage a household budget. The term budget describes a fundamental concept in personal finance. Growing your savings, investment portfolio, and even your charitable giving all depend on your budgeting skills. Budgeting can be taught to children in a number of ways, depending on their developmental stage. When your kid gets money, the best thing to do is to have them sort it into 3 different envelopes: save, spend, and give. Have them split down the middle between these 3 buckets. As they get older, you can work with them to establish more nuanced ratios, such as 50% savings, 40% spending, and 10% giving to leadership. Your children will follow your lead at the end of the day. Providing a positive example for others to follow is crucial. They will learn far more from watching you than listening to you, so if you're encouraging them to work hard, save money, and avoid unnecessary purchases, then demonstrate those behaviors yourself. Your kids will have a huge leg up on the competition thanks to you. If you can instill in them some rudimentary financial literacy before they leave the nest, you'll be setting them up for a lifetime of success, as they'll be less likely to make the naive decisions that sabotage the careers of so many 20 and 30-somethings. You can't satisfy everyone's demands. As kids get a better grasp on the idea of ownership, no becomes one of the most crucial words a parent can master. The fact that they can't always get what they want is another lesson that needs to be drilled into their heads. The desire to provide for one's children causes a great deal of stress for many parents. Though it's tempting to do so out of love, remember that by resisting the urge you'll be raising a much better human being. If you show them that life is full of sacrifices and that they have to make choices about how they spend their time and money to get what they really want, this idea of limited resources serves to motivate people to behave responsibly. Have a wonderful day, and I'll see you tomorrow.